Hi everybody, this is Gary dealing with Sentiment Timing, and this is our free technical video report for Tuesday, October 30th, 2018. So we saw a pretty wild ride today, but everything went pretty much as expected. And when we take a look at our predictive analytics model, what we're really looking for right now, we know we have sentiment, we know we have technical, so we're waiting for the time period to come into play before getting aggressive on the long side. Now, I'm going to show you a couple alerts. I'm not sure if anybody saw this video yesterday, but what we put out was there was a 5% bullish reading on sentiment from Friday, and that was a pretty, we had a pretty nasty day on Friday. But this was today, and this is after Monday's big move when we were up 60 points and then dropped 60 points. But the S&P ended up closing only down 17, so we saw buying at the end. But this gave us a 3% sentiment reading. So what this is telling us, the sentiment readings basically go from 0%, which means nobody's bullish on the market, to 100%, which means everybody's bullish on the market. And when you get these extreme readings, what happens is it's not the side that you want to jump on, and typically that is exactly when the retail traders jump into the market, is they'll get long at the thrill and the euphoria, because again they're watching the news networks that don't see a reason why this market's ever going to go down. And institutions, once they get into this thrill area here, this is when they start unloading their long positions, and at the euphoria they start building short positions. And from there, everybody that's buying up here is buying the dips, and then we start heading down. And once we get into the capitulation, again, the institutions start unloading their short positions. They wait for this low part when everybody is just throwing in the towel on the long side. And again, nobody is bearish on the market, and that's when they're buying the market. And again, this cycle just repeats month in and month out. So let's take a look at sentiment, and this is what we're talking about. Notice how everybody is bearish on the market here. This drop back in June, we had a 3% and a 1% sentiment reading, meaning not many people were bullish on the market, and from there we came up and made new highs. Notice when we're at tops here. Now this didn't give us an exact top on it, but once we got a third one up here, the point is that people get long at the wrong times and they get short at the wrong times. So being able to see what investors, how they're feeling, it gives you an unfair advantage over, I'm going to go out and say 99% of the traders out there, because there's not many people that really track or know how to trade sentiment. And Woody Dorsey's been doing it for 40 years. He has an institutional newsletter where some of the largest financial institutions in the world have been following him for 40 years. And this is just what one of his clients had said, is that there's not many analysts in the world worth following. Woody Dorsey is an exception. His method and analysts have kept me on the right side of the markets, both major and intermediate turning points over the years. I would not like to be on the other side of the trade of Woody Dorsey. Now, this is the president of Zoloft Asset Management. These are people that follow him because he has information that nobody else has. And this is what I talk about with an unfair advantage over many traders out there, because not only are you getting sentiment readings, you're also getting turn dates, and from there we work in the technical aspect of things. So here you can see everybody's bearish on the market. You listen to the news networks, they're looking for another 20% down. And if we take a look at the longer term sentiment, look what we have here. We have a divergence going where we have the S&P making lower lows and sentiment is making a higher low. It's the same as your regular technical indicator, but it's based off of traders' emotions. Here was the topping process. We had a sentiment divergence. From here, we were telling traders that our members that this was not the time to be long. We're waiting for a breakdown, and once we got the first break, that's when we got short, and from there we had an easy ride to the downside. So when you have with your predictive analytics model like we use, we combine all three of these. We have the time periods where sometimes they're not going to work out exactly on that date, but you're going to know even if they pass through that date, whether it be for a low or a high, it doesn't make that trade safe anymore. Meaning, if we are looking for a top and a top does not happen on that the date, the time period that Woody has, it doesn't make it safe to go long after that, because sentiment is typically going to be pegged on the bullish side and technicals are going to give us divergences, and vice versa on the downside, where we have time and it may come a little quicker than we think. We still think that there's we have time for the real low to come into play, but we know we have sentiment that's extremely bearish. We have technicals that are giving us bullish divergences, which I'll show you in a second, and the time period, we're heading into this time period where a low could be made. So if we take a look at our charts here, this is a bullish falling wedge here. So this is a bullish pattern right here. Here you can see we have bullish divergences on the price oscillator, and we're very, very oversold right here. So this pattern is looking for a target someplace up into the 27.94, possibly even a 28.22. We're starting to break out of it right now, but again, the time period is not exactly there. And when Woody is saying that he's looking for a low date on a specific time period, it doesn't mean that that has to be the low. This very well could have been the low for this move. And what happens is we start getting a little bit of choppy action, start testing, and support starts holding, and that's when we rocket higher. And we already know when to expect the top date. And the best part about that is that once that top date, I'm going to actually go to this part right here. So once what we're looking for right now is the low date. This is the next low date that we're approaching, and like I said, it may just be a secondary low where we come and test support or something, or the market could just take off because we are in this area right here where nobody's bullish on the market. So even if the date comes early, we already started layering in long positions, and if the market ends up going down some more, that's fine. We're just going to layer in the long position because we're building it based upon our predictive analytics model, and the only thing that's missing right now is the time piece. So that's coming no matter what. That's a solid thing. We know when that is coming, but it could happen before. So we already have the sentiment and the technicals. So shorting right now it's just not the option that you want to be doing. Even if we head lower, you're asking for trouble because you are going to be the one that's not you, but the shorts are going to be the ones that are covering up here, and that's probably going to be moving into our next top date, and that's what we're looking for. So this is what members know, the low date, but we already put out the alert today that we had a 5% and a 3% sentiment reading, so we may have seen the low already, so it's not time to be shorting, and there's going to be decent upside into, which I said, we already know the top date, and then a perhaps surprisingly robust downside, and we know that time. So this is the part where I'm talking about removing your emotions. When you know these dates ahead of time, then you turn around and you have sentiment that's supporting either a top or a bottom, and then from there you just look at technicals and say these patterns that are in place, and once we start breaking out, you start building a long position. So today the trigger, which it actually is a little bit easier on the 15-minute chart, the trigger was a break above the 26.74, stop down at the 26.40. But for this trade, I'm not putting my stop in because even if we head down, I'm building my position. So I don't want to get stopped out here and then have to buy back, or we look for the swing trades. So if it heads down, I'm just going to build my position, and then the next support areas I would be looking at would be the 25.88 and then down at the 25.55. So we know where pivots are, and right now the reason why I took this trade was because this may have been the low. We may come up and just use this as support and then head higher, but the point is that we have the technicals that are pointing to a low. We have sentiment that's pointing to a low, and we're heading into a time period that's going to be bull friendly. So right now, if the bulls can push above this right around that 26.89, which we're pretty close to. They're probably going to jump up to the 27.06. That was my short-term target that I gave to members. If they get above that, then we're heading up to the 27.25. From there, they have to make a decision. Do they want to take some money off the table and wait to buy on any kind of dip, or just hold it and buy the dips? Which that's what I'm going to be doing. I'm holding this, and then if we come down, I'm just going to continue to build the position, because again, my targets are all the way up at the 28.60 as well as the 29.20. So we're going to have some massive moves going in. I think it's going to be to the upside, but there's going to be volatility also until we get into that bull-friendly time period that's approaching. And once it's there, we're going to know how long to ride the long to phase out into the next top date. And then from there, we're going to do exactly what the institutions do. When everybody starts to get thrilled about the market and talking about new highs and calling all the bears stupid because they were short down here, we start unloading our long positions and start building a short position, because long position and building a short position at the euphoria, because we know what's coming next, and it's probably going to come going right into the next top date. So with that, have a great night, and I'll try to get a report out tomorrow.